The Iraq Stock Exchange recorded a notably subdued performance last week, reflecting a broader atmosphere of caution and uncertainty among investors as trading activity fell sharply compared with the previous week. Total trading value exceeded 1.7 billion Iraqi dinars, roughly equivalent to $1.14 million, yet this figure represented a significant decline around 69% week-on-week. Such a contraction in value highlights how quickly market sentiment can shift in response to economic signals, liquidity conditions, and investor expectations, especially in an emerging market like Iraq's, where confidence plays a decisive role in daily trading behavior. Looking deeper into the numbers, the exchange witnessed the trading of approximately 1.27 billion shares with a combined value about 1.714 billion dinars. This sharp reduction in volume suggests that fewer investors were actively participating, or that those who did participate were trading more cautiously, limiting their exposure amid uncertainty. The trades were executed through 254 contracts, a figure that further underlines the slowdown in activity, as contracts typically rise when market participation broadens and investor confidence strengthens. The ISX60 index, which serves as a key benchmark for the Iraqi stock market, closed at 984 points. This closing level reflected a decline of 353% compared with the previous session, indicating that price pressures were tilted more toward selling than buying. Although a drop of slightly over 1% might seem modest in absolute terms, it carries symbolic weight in a market that often reacts strongly to shifts in sentiment. Index movements like this can influence how both domestic and foreign investors perceive short-term risk, potentially shaping trading decisions in the sessions that follow. Investor participation last week spanned shares of 69 listed companies, showing that despite the overall decline, activity was not confined to just a handful of firms. This breadth of participation suggests that the slowdown was market-wide rather than isolated to a specific sector. However, this situation typically arises when buyers and sellers cannot agree on price levels, reflecting divergent expectations about company valuations or future performance. In addition to the inactive companies, 10 firms remained suspended from trading after failing to submit the required disclosures. Suspensions of this nature are a reminder of the importance of transparency and regulatory compliance in maintaining market integrity. While such measures are designed to protect investors and uphold standards, they also reduce the number of actively tradable securities, which can further dampen overall market liquidity. In a week already characterized by reduced activity, these suspensions likely contributed to the thinner trading environment observed on the exchange. The structure of the Iraq Stock Exchange itself provides important context for understanding these developments. The ISX operates 5 sessions per week, from Sunday through Thursday, aligning with the regional business calendar. It currently includes Holland 104 listed companies across a diverse range of sectors including banking, telecommunications, industry, agriculture, insurance, financial investment, tourism, hotels, and services. This sectoral diversity is one of the exchange's strengths, as it offers investors exposure to multiple segments of the Iraqi economy. However, it also means that broader economic or political concerns can ripple across sectors simultaneously, influencing overall market performance. The sharp week-on-week decline in trading value and volume raises important questions about the underlying drivers of investor behavior. One possible factor is the broader economic environment, including inflation trends, currency movements, and fiscal policy signals. When investors perceive increased macroeconomic risk or uncertainty, they often adopt a wait-and-see approach, reducing trading activity until clearer signals emerge. This behavior can create a self-reinforcing cycle, where lower activity leads to weaker price discovery and in turn, further discourages participation. Liquidity conditions also play a critical role in shaping market outcomes. In weeks when liquidity tightens, whether due to seasonal factors, policy changes, or shifts in capital flows, trading volumes can decline rapidly. For institutional investors, reduced liquidity increases transaction costs and market impact, making large trades less attractive. For retail investors, lower liquidity can translate into wider bid-ask spreads and greater price volatility, factors that may prompt them to step back from the market temporarily. Another consideration is investor confidence in corporate performance and governance. The fact that 10 companies were suspended for failing to meet disclosure requirements may have had a psychological impact beyond the directly affected firms. Transparency is a cornerstone of investor trust, and concerns about disclosure standards can lead investors to reassess risk across the market. Even companies that are fully compliant can see their shares affected if overall confidence in market governance weakens. The performance of the ISX60 index provides a snapshot of how these various factors converged during the week. An index decline of 353% suggests that selling pressure outweighed buying interest, but not in a panic-driven manner. Instead, the movement appears consistent with a cautious market environment, where investors are selectively reducing exposure rather than exiting en masse. This distinction is important, as it implies that the market may stabilize relatively quickly if confidence improves, or if supportive news emerges. Sectoral dynamics within the exchange may also help explain the observed trends, even though the weekly data does not break down performance by sector. In markets like Iraq's, banking and financial services often play an outsized role in overall activity, due to their weight in market capitalization and investor interest. If these sectors experience weaker earnings expectations or regulatory uncertainty, the impact can be felt across the entire index. Similarly, sectors such as telecommunications and services, which are closely tied to consumer demand, can be sensitive to broader economic conditions. The absence of trading in 25 companies due to unmatched orders highlights another structural challenge facing the market depth. In less liquid markets, it is common for certain stocks to experience sporadic trading, with long periods of inactivity punctuated by occasional bursts of volume. This pattern can deter investors who seek the ability to enter and exit positions efficiently. Improving market depth, through measures such as encouraging broader participation and enhancing market-making activities, could help mitigate this issue over time. Despite the weak weekly performance, it is important to view these developments within a longer-term perspective. Short-term fluctuations in trading value and volume are a normal feature of financial markets, particularly in emerging economies undergoing structural transformation. The Iraq Stock Exchange has made progress over the years in expanding its listings, improving its trading infrastructure, and strengthening regulatory oversight. Periods of reduced activity can serve as a reminder that market development is not linear and that setbacks are often part of the growth process. From an investor's standpoint, weeks like this one can offer both challenges and opportunities. Lower trading volumes and declining prices may increase risk in the short term, but they can also create attractive entry points for investors with a longer-term horizon who believe in the underlying fundamentals of the Iraqi economy. Careful analysis, diversification, and attention to company-specific factors become especially important in such environments. The role of policy and regulation should also be considered when assessing the market's performance. Clear communication from regulators, timely enforcement of disclosure requirements, and initiatives to enhance transparency can all contribute to rebuilding confidence after periods of weakness. At the same time, macroeconomic policies that support growth, stability, and investment can have a positive spillover effect on capital markets, encouraging both domestic and foreign participation. Foreign investor interest, while still limited compared with more developed markets, represents a potential source of growth for the Iraq Stock Exchange. However, foreign investors tend to be particularly sensitive to liquidity, governance standards, and political stability. A week marked by a sharp decline in trading activity may not, on its own, deter long-term investors, but sustained periods of low liquidity could weigh on the exchange's attractiveness over time. Looking ahead, market participants will likely be watching upcoming sessions closely to see whether trading activity rebounds or remains subdued. Any improvement in volume and value would signal renewed confidence, while continued weakness could suggest that investors are waiting for clearer economic or policy signals. Corporate announcements, earnings reports, and disclosure updates from suspended companies could also influence sentiment. especially if they address existing concerns and reduce uncertainty. The fact that the Iraq Stock Exchange operates 5 days a week provides ample opportunity for such adjustments to play out. Daily trading sessions allow information to be quickly reflected in prices, but they also mean that sentiment can shift rapidly in response to news. In this context, the performance of the ISX60 index in the coming days will be an important indicator of whether last week's decline was a temporary pause or part of a more sustained trend. In summary, the past week on the Iraq Stock Exchange was characterized by a significant slowdown in activity, with trading value falling to just over 1.7 billion dinars and volume dropping sharply compared with the previous week. The ISX60 index declined modestly, reflecting cautious sentiment rather than outright panic. Participation was spread across dozens of companies, yet a substantial number saw no activity, and several remained suspended due to disclosure issues. These developments underscore the complex interplay between liquidity, confidence, regulation, and economic conditions in shaping market outcomes. While the short-term picture appears subdued, the broader trajectory of the exchange will depend on how these factors evolve, and how effectively stakeholders respond to the challenges highlighted by this week's performance.